What if I told you that there's an investment tool that can help you diversify, minimize risk, and potentially grow your wealth without needing to be a stock picking expert? Imagine an investment that gives you access to hundreds, even thousands of companies or assets with just a few clicks. Sounds too good to be true? Well, that's the beauty of ETFs, or exchange traded funds. Whether you're just starting your investment journey or you've been trading for years, ETFs have likely crossed your path. But what are they? How do they work? And most importantly, why should they be a part of your investment strategy? Well, that's exactly what we're diving into today. Before we get started, make sure to hit that subscribe button and turn on notifications. We're aiming for 1,000 subscribers, and your support helps bring more valuable content to help you make informed financial decisions. So, you're probably asking yourself, what exactly is an ETF? How does it work? Why do so many people talk about them as the future of investing? Let's break it down together. What is an ETF? Let's begin with the basics. An ETF, or exchange traded fund, is essentially an investment fund that holds a collection of assets like stocks, bonds, or commodities and trades on the stock exchange, just like an individual stock. This means that instead of having to buy individual shares of multiple companies, you can buy a single ETF that provides you with exposure to all those companies at once. You can think of it like buying a basket of goods instead of going to multiple stores to pick up individual items. Let me explain the key points. ETFs are traded on the exchange, just like stocks, which means you can buy and sell them throughout the trading day. That's a major benefit when compared to mutual funds, which can only be traded at the end of the day. And unlike mutual funds, ETFs are usually passively managed, meaning they track an index, sector, or group of assets. For example, if you buy an ETF that tracks the S&P 500, you're investing in a basket of 500 companies, representing a wide swath of the U.S. economy. No need to pick individual stocks or guess which ones are going to outperform. ETFs give you immediate diversification. Why should you invest in ETFs? Now let's talk about why ETFs have become so popular. The first reason is diversification. As an investor, diversification is one of the most important strategies for minimizing risk. Think about it. If you put all your money into one stock and that stock drops in value, you're in trouble. But if your money is spread across 200 or even 500 different stocks, you're much less exposed to the volatility of any single company. ETFs help you achieve that diversification. If you buy an ETF that tracks an index like the S&P 500, you own small pieces of all the companies within that index, from big tech players like Apple and Microsoft to smaller firms. You're essentially buying into the growth of the whole market, not relying on just one stock to carry you. Second, ETFs are cost-effective. Compared to mutual funds, ETFs typically have much lower expense ratios. While a mutual fund might charge you 1% or more of your investment every year, an ETF might only cost you 0.1% or even lower. Lower fees mean you keep more of your money working for you over the long term. That's a major advantage, especially when it comes to compounding returns. Third, liquidity is a major benefit. ETFs trade throughout the day just like stocks, so you can buy and sell them when you want. This gives you more flexibility in responding to market conditions. Whether you're buying more shares or selling off part of your position, ETFs allow you to make moves during the trading day. Types of ETFs. Now that we know what ETFs are and why they're beneficial, let's dive into the different types of ETFs. There are many types, and each offers a unique way to access various sectors of the market. Equity ETFs. Equity ETFs are the most common type. These ETFs invest in stocks, typically following a specific index like the S&P 500 or the NASDAQ 100. If you buy an equity ETF that tracks the S&P 500, you're buying shares in the 500 largest companies in the United States. These funds provide broad exposure to the stock market and are great for long-term growth. Bond ETFs. Bond ETFs invest in bonds instead of stocks. These are great for investors who are looking for lower-risk investments that offer income, such as dividends. Bond ETFs can give you exposure to government bonds, municipal bonds, or corporate bonds. If you want to add some stability to your portfolio and reduce volatility, bond ETFs are a good choice. Sector and industry ETFs. If you want to bet on the future of a specific sector or industry, there are ETFs for that too. From technology and healthcare to energy and financials, sector ETFs allow you to invest directly in the sectors you believe will perform well. For example, the Technology Select Sector SPDR XLK tracks the technology sector, giving you exposure to major companies like Apple and Microsoft. Thematic ETFs. Thematic ETFs focus on trends or themes such as renewable energy, artificial intelligence, or clean water. These funds are great for those who want to invest in future-focused trends and innovations, even if they're outside the traditional sectors. International ETFs. International ETFs offer exposure to markets outside the US. You can invest in specific countries, regions, or emerging markets. If you're interested in gaining exposure to growing economies like China or India, an international ETF can be a great choice. Commodity ETFs. Commodities like gold, oil, and agricultural products are also accessible through ETFs. Commodity ETFs track the price of a commodity, making it easy for you to invest in these physical assets without needing to buy or store them yourself. How to choose the right ETFs for your portfolio. Choosing the right ETF depends on several factors. Here are some key things to consider when selecting ETFs to add to your investment goals. What are you trying to achieve? Are you looking for growth, income, or stability? Growth investors typically lean towards equity ETFs, while those seeking income might prefer bond ETFs. If you're after exposure to a specific trend or sector, thematic or sector ETFs are the way to go. Risk tolerance. How much risk are you willing to take on? Some ETFs are riskier than others, depending on the underlying assets. For example, international or sector-specific ETFs may be more volatile than broad market ETFs. Make sure to choose ETFs that align with your risk tolerance and financial goals. Costs. Pay attention to the expense ratio of the ETF. The lower, the better, as this means less of your money is being used to cover management fees. That said, also consider how well the ETF has performed over time and whether it fits into your broader investment strategy. Diversification. While some ETFs are highly diversified, others may focus on a single sector or country. Be mindful of how much exposure you want to certain industries or markets. The goal is to maintain a balanced portfolio that helps reduce risk while maximizing potential returns. How to buy and sell ETFs. Investing in ETFs is as easy as buying stocks. Here's a quick guide on how to buy and sell ETFs. Open a brokerage account. To buy ETFs, you'll need a brokerage account. There are many online brokers available today that make it simple to open an account and start investing. Some popular brokers include Robinhood, E-Trade, and Charles Schwab. Choose your ETF. Once your account is open, browse through the available ETFs, research the different types, and choose the one that fits your investment goals and risk tolerance. Make your purchase. After selecting an ETF, you can place a buy order through your broker. Unlike mutual funds, which can only be traded at the end of the day, ETFs can be bought or sold at any point during regular market hours. Monitor your investment. Once you've purchased an ETF, it's important to monitor its performance. Most brokers offer tools and resources to help you track your investments and adjust your portfolio as needed. Conclusion: ETFs as a key to successful investing. In conclusion, ETFs offer an incredible opportunity for both novice and experienced investors. They provide diversification, cost efficiency, and flexibility, all of which are key components of a solid investment strategy. Whether you're looking to build a long-term portfolio, explore specific sectors, or gain exposure to international markets, ETFs are a powerful tool that can help you reach your financial goals. Remember, the key to successful investing is to stay informed, continuously learn, and make decisions based on your goals and risk tolerance. By incorporating ETFs into your strategy, you're already on the right path to building a balanced, diversified portfolio. If you found this video helpful, don't forget to like, subscribe, and turn on notifications. Your support helps me create more valuable content to help you on your financial journey. Let's hit 1,000 subscribers together.